Investments, as we know them today, have deep roots that go back to ancient civilizations. In ancient times, investment methods were varied and adapted to the needs and technologies of the era. From loans to sponsorships, these investments not only boosted trade and the economy, but also left a lasting legacy in financial history. We begin with loans, one of the oldest forms of investment. In civilizations like Mesopotamia, loans were made through written contracts on clay tablets. These loans were essential for facilitating trade and agriculture. Farmers, for example, needed financing to buy seeds and tools, while merchants required funds to purchase goods that they later sold in distant markets. Another form of investment was sponsorship. In ancient Greece and Rome, wealthy citizens sponsored public events such as games, theaters, and festivals, hoping to gain prestige and political favors in return. This type of investment not only benefited the community, but also elevated the social status of the sponsor. Throughout this video, we will explore these and other forms of ancient investments, analyzing how they worked, who participated, and their impact on society. Understanding these ancient practices will help us appreciate how investments have evolved and their importance in economic development throughout history. In ancient Mesopotamia, the cradle of one of the earliest known civilizations, loans played a crucial role in economic development. Loans not only facilitated trade, but were also essential for agriculture, the main livelihood of the region. Loans were recorded on clay tablets using cuneiform writing. These contracts detailed the terms of the loan, including the amount borrowed, interest rate, and due date. Temples and palaces often acted as primitive banks, offering loans and accepting deposits. Temples, in particular, enjoyed great trust among the population due to their sacred nature. One of the most common loans was the lending of seeds to farmers. During planting seasons, farmers borrowed seeds to plant their crops. Once they harvested, they repaid the loan with interest, which was usually a portion of the crop. This system allowed farmers to overcome difficult seasons and ensured a consistent food supply. Trade also greatly benefited from loans. Merchants needed funds to acquire goods, which they later sold in distant markets. These commercial loans helped expand trade networks and contributed to the economic growth of Mesopotamia. In ancient Egypt, loans were fundamental to the economy and were widely used in agriculture, trade, and construction. Similar to Mesopotamia, temples and palaces played a central role in providing loans. Loan contracts were inscribed on papyrus, detailing the terms of the loan, including the amount borrowed, interest, and maturity date. Loans were primarily used to finance agricultural projects. Farmers borrowed money to purchase seeds, tools, and livestock. After the harvest, they repaid the loan with interest. One of the most interesting aspects of loans in ancient Egypt was the use of land as collateral. If a farmer could not repay the loan, the lender could claim the land as payment. This system not only provided security for the lender, but also encouraged careful resource management by the borrower. Trade also benefited from loans. Egyptian merchants needed funds to buy goods that they later sold in other markets, both within Egypt and abroad. These loans helped expand Egypt's trade networks and fostered cultural and economic exchange with other civilizations. Ancient Greece, known for its thriving trade and culture, also developed advanced systems of lending and financing. Loans were essential for maritime trade, one of the main economic activities of the Greek city-states. In Greece, loans were recorded in written contracts and were conducted both between individuals and through early banking institutions. Temples and wealthy individuals acted as lenders, providing financing to merchants and farmers. Maritime trade required significant initial investment to purchase and equip ships, as well as to buy goods. Greek merchants often took out loans to cover these expenses. In return, they promised a share of the profits obtained from the sale of goods in foreign markets. This type of loan, known as bottomry loan, allowed Greek merchants to expand their operations and explore new markets. Besides commercial loans, Greek citizens also took out loans to finance personal projects, such as building homes and purchasing land. These loans were fundamental to the economic growth and urban development of the Greek city-states. In addition to loans, sponsorships were a crucial form of investment in ancient Greece. Wealthy citizens sponsored public events and projects, not only as an act of philanthropy, but also as an investment in their reputation and social status. Sponsorships covered a wide range of activities, from funding the construction of public buildings to sponsoring festivals, theaters, and sporting competitions. The Olympic Games, for example, were often sponsored by wealthy citizens seeking to gain prestige and political support. One of the most notable examples of sponsorship in ancient Greece is the funding of theatrical productions. Theaters were an integral part of Greek cultural life, and wealthy citizens sponsored the production of plays. This sponsorship not only benefited the community by providing entertainment and education, but also elevated the status of the sponsor. Sponsorship also played an important role in the construction of infrastructure. Temples, stadiums, and other public buildings were often funded by wealthy citizens who sought to leave a lasting legacy. These projects not only beautified the Greek city-states, but also fostered civic pride and social cohesion. In ancient Rome, loans and financing were fundamental for trade and the expansion of the empire. The Romans developed advanced loan systems that included both private individuals and early financial institutions. Loans in Rome were conducted through written contracts, which detailed the terms of the loan, including the amount borrowed, the interest rate, and the repayment date. Lenders were often wealthy citizens or institutions like temples and trade associations. One of the most interesting aspects of loans in Rome was the practice of Finis Nauticum, a type of maritime loan. This loan was used to finance commercial expeditions and was characterized by a high interest rate due to the risks associated with sea travel. If the expedition was successful, the lender earned a significant profit. If it failed, the borrower was not obligated to repay the loan. In addition to commercial loans, the Romans also used loans to finance personal and public projects. Citizens would take loans to buy land, build houses, and start businesses. These loans were essential for Rome's economic growth and urban development. In ancient Rome, sponsorship and patronage were essential forms of investment for wealthy citizens. These acts of generosity not only benefited the community, but also elevated the social and political status of the sponsor. Patronage covered a wide range of activities, from funding public works to sponsoring artists and writers. Emperors and senators often sponsored the construction of temples, aqueducts, and other public buildings as a way to gain public favor and consolidate their power. One of the most prominent examples of patronage in Rome was the sponsorship of the arts. Poets, writers, and artists were often funded by wealthy citizens who wanted to promote culture and education. This patronage not only enriched Rome's cultural life, but also provided a platform for artists to express their ideas and talents. Sponsorship of public events, such as games and sports competitions, was also common. Wealthy citizens sponsored these events to gain prestige and political support. These games not only provided entertainment, but also fostered civic pride and social cohesion. With the fall of the Roman Empire and the beginning of the Middle Ages, investments continued to evolve. During this period, investments were dominated by the church and monastic institutions, which played a crucial role in the economy and financing. Monasteries and cathedrals acted as financial centers, offering loans and accepting deposits. These loans were mainly used to finance agriculture and trade. Farmers took out loans to buy seeds and tools, while merchants used the funds to acquire goods. One of the most interesting aspects of investments in the Middle Ages was the use of land as collateral. Landowners often mortgaged their land in exchange for loans. If they could not repay the loan, the lender had the right to claim the land. This system provided security for both the lender and the borrower. Trade also benefited from these investments. Italian city-states like Venice and Genoa developed advanced financing systems that included commercial loans and trade partnerships. These systems helped expand European trade networks and fostered cultural and economic exchange with other regions. The Renaissance, a period of cultural and economic rebirth in Europe, brought significant advancements in investments and financing. During this time, Italian city-states like Venice, Florence, and Genoa became financial and commercial hubs. One of the most notable developments was the rise of modern banking. The Medici family in Florence, for example, established one of the first international banks, offering a wide range of financial services, including loans, deposits, and money transfers. These banks not only facilitated trade, but also provided funding for artistic and architectural projects. Maritime trade also thrived during the Renaissance, and investments in commercial expeditions became common. Merchants took out loans to finance journeys to distant lands, where they purchased spices, silk, and other exotic goods, which they later sold in Europe. These loans were often high risk, but they also offered substantial rewards. In addition to loans and banking finance, patronage continued to be an important form of investment. Wealthy citizens sponsored artists, writers, and scientists, fostering cultural flourishing and the advancement of knowledge. Throughout history, investments have played a crucial role in the economic and social development of civilizations. From loans in Mesopotamia to sponsorships in ancient Rome and commercial investments during the Renaissance, each era has left important lessons that remain relevant today. One of the most important lessons is diversification. Ancient civilizations understood the importance of not putting all their resources into a single investment. Merchants diversified their trade routes. Lenders provided loans to various types of borrowers, and sponsors supported a range of cultural and social projects. This diversification not only mitigated risk, but also increased the chances of success. Another key lesson is the importance of documentation and contracts. From loan contracts in Mesopotamia to sponsorship agreements in Rome, detailed documentation and clear terms were essential to protect the interests of all parties involved. This practice remains fundamental in modern finance. The role of patronage and sponsorship also teaches us the value of investing in community and culture. Investments in art, education, and infrastructure not only enrich society, but can also offer long-term benefits to the investor, whether in the form of prestige, influence, or a lasting legacy. Ancient investments may seem distant, but the lessons they left us are more relevant than ever. In this scene, let's look at how we can apply these lessons to our everyday lives. First, diversification is key. Instead of putting all your money in one place, consider diversifying your investments. You can invest in different types of assets, such as stocks, bonds, and real estate. This not only reduces risk, but also increases your chances of getting good returns. Second, the importance of contracts and documentation. Before making any investment, make sure you understand all the terms and conditions. Read the contracts carefully and don't hesitate to ask for clarification if something isn't clear. Proper documentation protects you and helps avoid misunderstandings. Finally, the value of investing in community and culture. Consider supporting local projects, whether through donations, volunteering, or investments. These investments not only benefit your community, but can also offer personal and professional rewards. For example, you might invest in a small local business that's just starting up. This investment could not only offer you a good financial return, but also strengthen the local economy and create jobs. Similarly, supporting cultural and educational events can enrich your community and boost your own sense of belonging and civic pride. In summary, the lessons from ancient investments are timeless. By applying these principles to our financial decisions, we can build a solid foundation for long-term success and well-being.